Hey everyone, and welcome back. One of the coaches at Ungar Academy here. And this is our usual weekend chat about the market trends over the past week. Before we start, as always, I invite you to please go and subscribe to our channel. Go and click on the notification bell, and please leave us a like to this video as well. Thanks so much. Hi, we are the Ungar Academy, and we teach traders how to make money in the markets. Our founder, Andrea Ungar, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. All right, so guys, needless to say, I'm sure you know it's been another bad week in the markets. As far as the stock indexes are concerned, the markets have only gone down since mid-August, with a tiny exception in early September. I mean, as we can see from the performances of the indexes, the Nasdaq is down 1.67%, the Mini SP is down almost 2%, DAX is down 2%, the Euro Stoxx is down 1.76%. Well, another week of declines. The market tested the previous lows and even broke them slightly. At the moment, it looks like the trend is continuing in that direction. So, yeah, we'll see at the end of the day whether the support will be able to hold, or whether, as the price action seems more likely at the moment, prices will break below the mid-June lows. The bearish tendency in the markets has led to a slight increase in volatility, which I'd like to point out, by the way, is in the mid to high percentile range for both the short and the long term. As far as the bonds market is concerned, we also have declines in the T-bond, although this market seems to be showing a reaction in just the last 3 days. Slightly positive returns for the US 10-year bond, negative returns for the European Bund again, which is losing about 0.5% right now. Among the markets that have gone up, we have in the energy sector crude oil, which is up by 0.64%. Gasoline performed well at 2.8%, and heating oil at 1.78%. On the other hand, natural gas continued to fall despite the news of the week, namely the explosion of the Nord Stream 1 and 2 pipelines, which caused an increase in the price of European gas, but not even a particularly significant increase. Here we can see the 5-day trend for European gas. You see it is a little higher than last week, but the price increase isn't as massive as one might expect after what happened over the past few days. Let's move on to the metal sector, which has bucked the trend this week. And this is the first positive week in a long time, I'd say. We do know that it is a pretty weak asset class. The most significant gains have been in copper. Well, gold is up 1.28%, with minor increases in silver and platinum. Instead, we see a significant drop in the meat asset class. Lean hogs is losing 6.5% right now. Declines also occurring in live cattle and feeder cattle. Soft commodities, on the other hand, are showing mixed returns. We have positive 4% in orange juice, which has broken through recent highs. Cotton instead is down by 8%, which has returned to its mid-July lows. Finally, let's turn to the grains market, where we also see some mixed returns. Soybean meal lost 3.4% this week. Otherwise, there are no particularly significant movements. Turning instead to currencies, we're looking at a rebound in the euro against the US dollar. In the last 3 days, we've seen a bit of a reaction and therefore a strengthening of the euro against the US dollar, which is still at a reference price of 0.98. Also bucking the trend this week is the British pound, which is currently worth 1.11 against the US dollar. Moving on to Bitcoin, it's currently at about the same level as last week, with a slight increase of just 3.34%, so it is still close to the support level. Given the data that has been reviewed, and specifically the performance of the equity indexes since the beginning of the year, which have certainly been showing a relatively strong bearish trend, well, I'd expect to see exceptionally high implied volatility values, and especially a volatility term structure that is in backwardation. Whereas we're seeing a mixed structure at the moment. There is volatility compression, and more or less all volatility indexes on the SP500 are showing similar values. VIX is indeed at the upper end of the range of values that have been reached since the beginning of the year until now. We have a peak of about 39, and right now the value is at 31. But with such a steep decline, I would have expected to find much higher values and a volatility term structure in backwardation. All right, let's go take a look at the rollover plan scheduled for next week. Well, I can already tell you that there's nothing scheduled for next week. However, the next rollover is after the VIX future expires on October 12th. Okay. Well, guys, before we say goodbye, I want to remind you that if you are interested in systematic trading, you can watch a free presentation by Andrea Unger. I'm going to leave a link in the description, where Andrea Unger explains his trading method, which helped him win the World Cup Trading Championships in real money trading 4 times. The same link, you can also get the bestseller, The Unger Method, covering only the shipping costs, or book a free strategy consultation with one of our tutors. So please, do yourselves a favor, take advantage of it. And with that, that's it for today, guys. Thank you so much for watching. Please leave a like if you enjoyed the video. And I'd like to remind you to please subscribe to our channel and click on the notification bell. And with that, we will see you again next week. Have a fantastic weekend. Bye-bye for now.